Pennies Going in Raw is a production of iHeartRadio. The opinions expressed in the following podcast are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security or investment product. It is only intended to provide education and entertainment about the financial industry and the stock market. Enjoy!
On this episode of Pennies Going in Raw, we discuss the new highs on SPY and also what goes into making a $100,000 day.
You find out life's this game of pennies.
Oh, you guys know we only have a 40% runner. Hello? 40% is a fucking killing.
We've been compliant for too long. It's time we go to war.
I don't have a Roth.
Hugh knows so much about the market that his brain doesn't have enough room for grammar.
Hey, who told me about IDEX? It's going up a shit ton now.
Rob, 4%, baby. No way. 4 fucking percent.
You asked the exact same question with 2 words different.
It's like, man, I just got dick whipped for like 20%, and now that f***er's up like 50.
I bet Warren Buffett never did that.
I'm just making this voice memo to call out unusual whales to a fight.
The pennies we need are everywhere around us. Pennies.
Going in Raw.
Featuring Dan, Deity Dips, and Hugh Honey.
Produced by Vinny.
And Christian.
Let's go, baby.
Welcome back to another episode of Pennies Going in Raw. Today is Sunday, March the 27th. I think this is the first time we've recorded and dropped on the same day. You just got back from Aruba after a week-long trip. I just got back from Alabama. Very similar places. One was for a retirement party. One was for, just treating the fam. But So it is nice that we're recording this. There can't be, of course, we're going to drop it, and then there's going to be some crazy ass news that comes out 30 minutes later. But we're at SPY 452. You were talking about it, that we'd see a number before we saw another number. But I mean, it's at the point where it's looking like we're back on track to right where we were before the whole Russian shit even started, and all the inflation talks again and again and again.
Yeah, so we're only like 6% off of highs now. And listen, like I said last week, when we hit all-time highs, the video that we're putting together with every tweet that I got saying, how's your SPY thesis? How's your SPY thesis? SPY's not seeing all-time highs for years. It's gonna be dirty. I'm just saying that. But
yeah, even though it seems like it may have taken a while, I mean, in the grand scheme of things, it's only been, 2 months? I mean, when we're dropping 2 episodes a week, I mean, if you're wrong a couple weeks in a row, you were wrong 4 fucking times, so you seem like a damn idiot.
Yeah, and I mean, I was. Like, my timing was off. You
said you could potentially be early, and that's how you sized it.
Yeah, exactly. And so I'm still handling the same way. Actually, and I still have those SPY calls. They're only down about 34% now. They were down about 85%. In hindsight, I probably wouldn't have done SPY 490s. But again, that comes down to I felt like I had the thesis and it just took longer than I expected. So I'm still confident in 490. But what I would have done is that I would have taken a little more time. Or if I was still going to do the May 2027 or whatever it was, then I would have done just like 475s or 480s. Like I don't think it's going to be. I don't think it'll be possible to get 490 within the next. But I mean, maybe it'll be close, is what I'm saying. But I would have rather either added time or just had it closer to in the money. But like I said, is that they're only down 34% now. I like I said before, is that I'm holding it. It's only about 2 or 3% of my account, and that's the way that I'm handling it. And as I said earlier, it took more time than I expected, but we've seen a really good inflow recently, and I think that same thing as well. We've been saying it for the last like 20 podcasts, is that I think that every dip from here on out, unless things change from a macroeconomic standpoint, is a buyable dip. And so I'm going to keep doing what I said that I was doing, which would be, buy dips, sell rips, and hold a core position all the way back up to all time highs. And I'm fine with that. I'm fine with like I said, is that even if we go to 380 from here on SPY, I'm okay with that because I'm positioned correctly, and that's just something that you have to be prepared for. Like a lot of this volatility is tough. It's not easy to trade, and that's why I like the bigger thesis trade. And I think what we're seeing right now is that thesis is starting to work. And the other thing that I wanted to talk about was that we had talked about a potential situation where other markets inflow to U.S. equities. And I think that that's what we're seeing right now. We're seeing how strong SPY is. The SPY weekly candles have been ridiculous, but there's still that big 460 test. And personally, I'd like to see a pullback. I'd like to see a pullback before we go to all-time highs, just because we need it. I just want, and also because I sold on that big rip this week. So I would like a pullback to reload, and then we can go for that 460 line. And then once we're through 460, it's pretty much like we're back at all-time highs. And so as long as nothing changes, like I said, fundamentally from a macro perspective, we're pretty good. In my opinion, and the thesis is working. Like I said, the timeline was off, but we're getting there.
So aside from like the obvious war and Corona bullshit, is there any other negative catalyst that would potentially put a wrench in these plans?
Yeah, the Fed. It goes back to the bull trade analogy, which I don't see. Basically, the last Fed meeting was the big one, obviously. Because we lay out the plan for the rest of the year, it's the first rate hike. If inflation were to go higher from where it is now with the rate hike, that would be bad. Because basically, if we're going back to that bullet train analogy, we're going, like I said, we're going about 100 miles an hour. We need to go like 70 miles an hour. And so we put on the brakes. But if we press on the brakes too hard, then we're going to derail the train. And so it feels like we touched the handbrake and everything was going smooth and it's going great. Now, if we don't start to slow down the train, and what I mean by the speed is the inflation rate, then we'll have to obviously press on the brakes harder. And if we press on the brakes harder, then that could send us into a recession or quote unquote derail the train. And so personally, that would be terrible. I don't see a world where that probably happens, but oil is still going pretty strong. We definitely need to see oil pull back a little bit. And overall, the supply chain fuckery, honestly, that we're seeing right now doesn't help. So we really need to see inflation like actually come down a little bit, or it doesn't even need to necessarily come down. We just need to see it stall. Once you make that higher or that lower high, so think of it like literally like a chart. You see like the peak, and then we start to curve down. And once we see that lower high, it typically doesn't go back. You typically don't see highs after that first hike. So if we did see highs, then we'd have to raise like a pretty good amount, and that could send us into a recession. So that's the shit that scares me, and that's the shit that could happen. But like I said, that would be pretty odd. But again, I guess everything that we've seen inside the past 30 months has been really odd. So I guess expect the unexpected. But going into every Fed meeting, I think it's just smart to de-risk or put hedges on or more, or make sure that your book is really balanced, just in case. Because like I said, is that, it's although we don't expect it, it wouldn't be like completely off the chain, to see inflation hit an all-time high, or not an all-time high, but a higher high. But I don't see a world where that happens. And that's truly the only thing that I feel that that could screw up the SPY thesis. And of course, like we said, war. But I mean, we saw it this week. The headlines truly aren't moving the market anymore. It was the one headline, and sometimes I like to, just like kind of let the market digest things. And what was it? It was that Russia had taken over its first, Ukraine's first city. I forget the name of it.
Yeah.
Yeah,
Like,
and actually, Spy had like a green candle like 5 minutes later. Like, it didn't even react. So similar to COVID, it had its 3 weeks or 24-hour news cycle, and now it's really not affecting the market. So as long as chemical warfare, as long as nuclear warfare, as long as we're not declaring war, I expect that the market is pretty much pricing in more conflict between Ukraine and Russia.
All right. Well, getting on to our next topic, and you've had a few, is $100,000 days. I know it seems so unrealistic right now, but I mean, we're at that point where the market is getting to that hot stage again. You're seeing all of these stocks at super lows, a lot of squeeze potential, et cetera, et cetera. But obviously, there's a lot of different ways to have $100,000 days, but also a lot of requirements for it too. You can't go in, hey, just got above PDT, let's go for the big ones. So I think, going over your first ever $100,000 day, which was, I think, around 2 years ago now.
Yep.
And then, what it took getting there, and then, what you've noticed as a common theme of these $100,000 days, where it's killer over a few trades of options or big swings, whatever it might be.
Yeah. So first I'll go over the first $100,000 day, which was UAVS. UAVS, the day that, if anyone remembers it,
they had
the
web call. They had the web call.
That was 3 years ago. That's coming up on 3 years ago.
It was the web call.
Or was it 2019 or 2020?
It was 2020. It was after
2020.
COVID. Because everyone thought that Amazon was going to buy UAVS to use them as drones to deliver the stuff during COVID.
Yeah. So first I'll go over the common themes, and then I'll go over UAVS. The common themes for me typically are that it doesn't happen intraday. It actually, let me stop you. I haven't had $100,000 day in quite some time now. It's been at least a month and a half. And so the common themes that I typically see are it's typically a swing, and it's typically when I'm waiting for a catalyst, and I usually let the play just ride. It's one of those things where, I'm positioned. It all comes down to, I might not make much for weeks leading up to it. And then it makes makes the 100 grand or whatever it is. And that makes usually my month. So I think like that's really important. That's not like, 20 grand, 30 grand, 40 grand, and then 100. It's typically like, small incremental movements, maybe up 5 grand, down 10 grand, up 20 grand, down 50, or not down 50, but you know what I mean? Like down 20,
the $100,000 trade usually is the same thing as the $100,000 day. Like, it's not like, oh, I'm slow. The $100,000 trade doesn't happen over 20 days of consistent 5,000s.
Exactly. And so it typically happens where, I'm building a position into something for a catalyst. Another one was the first day of this year. I had made like 160 on Tesla. Tesla had gapped up 10% on good delivery numbers. And so I felt like I had an edge. They had smoked it into Friday. They had delivery numbers coming out, all this type of stuff. And so I was stalking that play for a long time. And so even though that was like an overnight, 160 or whatever it was, even though that's the way that it works, it was, I was stalking the play for a long time. So for me, it typically doesn't happen intraday. Like I said, it's building up a position, waiting for a catalytic event or something of that nature, which brings me to UAVS. UAVS was the first one. I had that thing at like 40 cents leading up to it. I had done tons of DD. Yeah, I connected so many dots, and I was swinging that thing for weeks. And so then it had gone all the way to like 85 cents at $1 when it was announced that when it was announced, when they had this big meeting that was announced. And then I had gotten out and I was having so much FOMO that I had gotten back in at like 96 cents. So like literally exactly where I sold it. And then because it ran to like 105, 110, did back down to 96. I was like, oh, done. I'm nailing this thing. And then it dropped down to 85 cents. And I was like, I had just believed inside the DD that I'd done. I had, the volume was there, the price action was there. And so I decided to go really big at that 85 cents. And what I mean by really big is that like I wasn't all in. It was one of those things where, if I'm usually risking 10 to 20% of my account, or if I'm usually risking 10 or 15% of my account, I'd gone up to 20, 25% of my account. You know what I mean?
Oh, dude, when it was UAVS, I think I was pretty close to like 80.
Yeah, I mean, listen, I wish during that time. There was a time when we were averaging like 1,000% runner every 5 weeks. Like that's ridiculous. You just so nuts to think about. But so that being said, so that being said is that I had gotten back in, and I mean I had paper handed the hell out of that thing. It had gone to like 120, 130, and I was starting to scale out. And I think that thing ran to 3 something intraday.
What happened was it hit, because I remember so many people had a $5 price target, and during the meeting that everyone thought Amazon would announce, because I think Amazon was actually having a meeting at the same time, and it almost hit 5 or barely tapped 5, and then the meeting, that's when everyone's like, I don't think it's happening, and it dipped back down to like $2 that day.
So I remember that, and so I'd always kept the scrap, and it's nuts. That thing ended up going pretty high. Like I remember looking at it occasionally, and the first time that I'd looked at it after like months, it was at like 7, and then I'd looked at it one more time,
it was like 15.
Yeah. So I had looked at it like randomly one day, and it had hit 1767, and I had the thing like 34 cents or like 45 cents, something wild, which is just insane. Like what a run. But that being said, now they're back down to like $1.45, which kind of interests me. But that being said, sorry, I was getting off topic. I really like the ones where I understand my risk. I understand where I'm going with this. Like, I understand the full picture. Like, it comes back to the matrix that we talk about sometimes, that we used to talk about a lot. And it comes back to, like I want to know everything about them, who the VP is, who the CEO is, who the CEO's daughter is, where she goes to school. I want to know everything about everyone so that I can mitigate some kind of risk. I want to know, did you have a DUI? Did you, is there any like shady past? And then I get into the business and I want to understand, what's up with this business. So especially like UAVS, the guy that had founded the company had owned, even while it was public, like had owned like a massive amount of, had owned a massive amount of the company, even though they were public, he still owned like tons of it. And it seemed like they were doing everything right. And it did seem, I will say, their office in, I forget the town, but it was in like Kansas or Kentucky or something. And it was like literally like a shed. But when I had found out that they were moving offices and I'd seen the new office, I was like, whoa, this is nice. And so I knew that somebody was fronting that bill. And so, you kind of put all those things together. Like I said, I basically had known the family at that point. Like, I'd never spoken to them, obviously, but
getting Christmas cards.
Yeah, exactly. But I felt like I had a pretty good idea of like what I was dealing with. The guy, the founder just loved the company, had tons of money in it, never really did like many offerings to dilute the stock. He had never taken like massive salaries, stuff like that. And so even though like that's not necessarily like a deal breaker, it's stuff that I want to see. Like I don't want to see some CEO taking, the market cap of like 60 million, taking like a $10 million pay. Like I want someone who, is there every day. Their website was kind of crappy at the time. Their website was kind of crappy. Their office was crappy. And so it just kind of builds the thesis up. And that's the way that I like to do it, because that gives me conviction in the play. Like I feel like I understand where they're going with this business, because I do treat it like an investment, but it's a short-term investment, if that makes sense. I don't know if I'm saying that right, but you know what I mean? Like I'm making an investment for the short term, even though I'm only trading it. And so that's typically what I find are when I have those big 6-figure days. Now, I do want to touch on, though, the intraday 6-figure trades, because I've had a few, but nothing crazy. For me personally, I mean, you got to risk a lot to kind of intraday. In my opinion, you typically got to risk a decent amount to do that intraday. And what I mean by that is that, again, it's not necessarily just monetary risk. You can risk the same amount as when I'm swinging, but there's so many things when I don't know much about a company that, you're adding to the risk, dilution risk, headline risk, all types of things that you're risking intraday. And then the other thing is that some of the 6-figure days have come from options, and we all know how that goes. Again, the risk is so high that you truly need an edge, or you're going to end up screwing yourself. So that's why I typically, like, when people, congratulate me on a big day or something, I'm like, listen, like, this isn't just like a day thing. This has been coming for a while. You put in the work weeks before this comes. Now it's basically like you're just hitting payday now. The intraday, you got to risk a lot. Think about to make 100,000, to make 100,000, if the option goes 200%,
Still have to put in 50 grand.
Yeah, you still got to risk 50 grand. And again, if the option goes 200%, that's a really good play. So, if it's moving 200%, that also means that it could move 50% down against you so much faster. Yeah, just as fast, which so that's wild. So if you're risking like 50 grand, like it's nothing, you probably have like $1 million account or something. You know what I mean? So it's like one of those things where that's a pretty big risk. So I want to say that something that I want to touch on too is that it's really important to understand that everyone can have a 6-figure day. It comes down to what we always talk about. It comes down to creating a process, having that systematic trading strategy, and then just scaling it. And that's why I personally love day or swing trading, because you can build a position in, and typically there's enough liquidity to where it's like you're not going to own the company, not at the money that I have. You know what I mean? Like I'm not going to own no company. It's a hedge fund's different story, but for my personal trading, I can scale that with a $100,000, $200,000 million account. You can scale that. It's just about, at that point, it just comes down to handling the emotions of the swings inside the P&L and seeing the numbers.
Yeah, and when we're talking about having like the account size for it, I mean, it seems obvious, but at the same time, you have so many people, they see these big gains, and they also see, okay, well, shit, CEI, I did have a 50-cent average. It did go to 5. All I need to do is put $10,000 in there and hold that, but I mean, it comes with so much more from like an obvious standpoint of emotions and all of that. Because no one's just going to have this $10,000 account and then they just get this score of 100K trade,
Yeah, no, exactly. So, overall though, one thing that I was actually thinking about in Aruba, I had a DM from someone that said, all I want to do is make like $700 a day. And I was like, and at first I was like, yeah, dude, like that's totally doable, and I had even tweeted something like, like all you need is like $3 grand a day, something like that. And that's like crazy amount of money. But then I was thinking about it, and I didn't delete the tweet, but I wanted to. I didn't delete the tweet because we got so many people who just I delete a tweet and it's like, you would think that
it's like, congrats on the SEC getting your ass.
Something, yeah, it's like something like like the tweet, I don't know, like had like inside information or something. So it's just easier for me not to delete it, just leave it and then come on here and explain it. But so I wanted to delete the tweet because when you create that systematic strategy, the sky's truly the limit. Like that's what it comes down to, is that it's not going to be just $3,000 a day in my opinion. And maybe Dan has a different opinion on this, but I truly think that when you create that systematic strategy, it just scales, and it might take time, but it just scales. Like, especially when you start to get up to, 20, 30, $40,000 months. I mean, that's when and you're not, and when you're taking money out of the account, it's not like you're taking 20% out. Like when you're truly starting to compound at those big numbers, it starts to get ridiculous. And so that's why
and your approach to scale, if it's systematic enough and you're disciplined in it, it should scale with the market as well, to where you won't just be like, hey, I need 700 up. It's bigger. It's 800. Now it's 900. It should be like, I know how I make this money and I know it won't work now. So maybe $300 is fine today, even though last week it was $800.
Yeah. Yeah, exactly. And so that's really the thing, is that, so I hate the and again, I did it myself this week, but I hate all I need is X amount every day. You know what I mean? And I get that thinking, but when you create the systematic strategy, it's literally this is going to be, I'm going to fuck this up. I know it. It's literally once you learn how to curl, once you learn how to, do dumbbell curls, that arm just gets so strong and you never lose it. You know what I mean? Like it would literally be like if you never lost muscle. That's the way that I look at this. Once you learn that systematic strategy, it's never going to go away. And all it's going to do is just get better over time. And so that's where it comes in that I
won't be able to argue with that one because I don't work out. So, I'll let it slide. I guess you learn how to do dumbbells, you'll never lose your arm, or whatever he said.
No, I meant think of it if every time that you did a dumbbell curl, you never lose any muscle after that. That's how I think of when you create a systematic strategy. Yeah, you know what I mean? Because it's literally once you, it's quite literally like riding a bike. Once you learn that systematic strategy, it's over. It's literally over. You learn that systematic strategy, and you have it for life, and then you just get better at it. And when you get better at it, that's when things really start to ramp up. And so you can do this $700 a day. That's fine. I know people who, ESQ, she trades with right around the same amount of money every single day and just takes it out, and that's fine. But I don't like I just need 700 a day. You know what I mean? I just don't like that saying, because it shouldn't be like that. And once you create that systematic strategy, it's not like that.
Yeah, no, it's definitely one of those things where it's take and go. You gotta take everything with a grain of salt, and it's never just going to be as easy as $700 a day. Because if it was that easy, trust me, I would have settled on $1,000 a day a while ago, and I would have, everything would be fine and dandy. Yeah. I'd settle for less than, what I'd like to get if I got a guarantee.
Exactly. Well, that's the thing about trading is, it's not. And so that's the cool thing. And that's also the sucky thing. But you're right. So I hate that. And so if you listening to this podcast and you're the one that DM'd me that, I'm sorry, I didn't want to put you on blast, but I really do think that, I really do think that mindset is, I'm going to sound like such a dick. I think that's a loser mindset. I do think that's a loser mindset, especially because I know myself, I don't even like super lavish things. Now I do, but it's more about, I want to set, my kids up, my kids up. So making $700 a day, yeah, that's great. And you can do that. But when you start to scale it, you can do $1,000 a day, $2,000 a day, $4,000 a day, $6,000 a day. And to everyone out there who that sounds so wild, trust me, I used to do $20 a day, in high school. And so, yes, it takes time, but, listen, once you hit $4,000 a day is $1 million a year. Surgeons go to school for 6 extra years. How long is it? 4 extra years? 5 extra years? How long extra do doctors go to school
Oh,
for?
for surgeons, I don't know. I think they're in that bit. I don't know. Grey's Anatomy's been going on like 15 seasons, so good bit.
Yeah, so it's like but I think it's like 4 extra years or something. I don't know.
I think
totally
that's what
fucking
it
up.
is for like a pharmacist. Like for a surgeon,
Okay, yeah.
they better be in that bitch for. Then they have like residencies and shit.
Okay,
I don't know.
exactly.
It's a long ass.
So let's just say in total it takes like 5 or 6 years. That's how you should look at trading. Like if you should look at trading as, okay, I'm going to become a doctor of trading. And it's going to take me 5 to 6 years to get up to that salary. But again, once you start to be consistent at that $3,000-$4,000 mark, you're making $1 million a year. And in pretty much, you're only going to get better at it. You know, it's the same thing. First time that a surgeon, cuts someone open, probably not going to be the best at it. Maybe a little shaky hands, but they're only going to get better at it. And they're only going to make more money. That's the way that you should look at trading,
Yeah, the first time you do a surgery probably won't be great. Little shaky hands. I'll keep that in mind next time I get one.
Every time that I'm on an airplane, I look at my sister and I say, "Yeah, I heard it's the pilot's first time."
I bet she loves that. Like the thing is, like pilots, I get it. I can deal with like a first time pilot. I feel like they've gone through enough training where it's like the shit they do in their training, I feel like it's got to be pretty fucking similar to flying a plane. But surgery, I feel like it's a little crazy. I think that one's wild. I got this surgery and I didn't even do any research the other day. I went to urgent care. They're like, you probably need surgery. Go. This hand doctor went there, and I was like, all right, yeah, we'll get it tomorrow.
It's fucking hilarious.
But yeah, I mean, in the risk of surgery is killing your patient. The risk of flying a plane is killing 200 people, and the risk of trading is killing your bank account. So I mean, there are risks to all of them.
Yeah, and arguably,
and the big part, and the best part, it's not like you get better at being a surgeon or better at flying the plane. You get better at not killing your plane, your flights, what are you called? Your fucking passengers or your patients. You're doing the same thing. It's just the guy's going to be a little more comfortable. In this case, your bank account.
Exactly.
Another metaphor for you by pennies going in raw. All right, guys. Well, I hope you guys enjoyed your weekend and have a great trading week. And we'll tune in on Wednesday. Big weeks ahead. What do you think? Hey, what do you think we see by Wednesday? I'm thinking 456.
Yeah, 456 and then a pullback.
Yeah. Well, mark it down on your calendar, folks. Peace.
Pennies Going in Raw is a production of iHeartRadio. For more podcasts from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts.